first, I would like to start by telling I'm very proud to be here with you today and having the possibility to share my small experience with you. My entry point is a little bit different because I'm not from the insurance industry. I used to work with NGO, and basically we were running a program to fight against poverty in rural area, and understanding the needs, insurance came to our work. So I have a presentation to share with you in 3 parts. The first one, perhaps we will take a few minutes to come back on this, the entry point and the basics of index insurance. Then in the second part, I will be pleased to share some experience we had the chance to develop. So basically go a little bit further about what is an index-based insurance product. Then in the last part, we will come back on the different challenges and opportunities mentioned by the colleague already. So as I tried to say it for start, how entry point was to answer the farmers' needs and not to increase the penetration rate of insurance. And few years after that, for West Africa, the objectives are the same. So what we saw, the crucial need for agricultural the crucial need for farmers was to have agricultural risk mitigation tool. Why? In case of poor harvest, of course, when the season don't go well, so the farmers will suffer loss on his revenue. And this loss of revenue will put them in a situation where he should to cut in the saving, or he should to be cut off access to the credit for the development of its activity. So in times of poor harvest, a tool is needed to secure the farmers and put it in situation to continue and to develop the activity. But even when everything is okay, even when the climate is here and the conditions are here, the risk associated with agricultural insurance is very high, especially for the financial sector. So there is a lack of guarantees, a lack of historical situation of farmers with their bank, making the agricultural loan very difficult to develop. So having an insurance has a guarantee, has a collateral, in fact, to propose to the bank, can support the financing of agriculture. So on this basis, what is agricultural insurance today? So we have mainly 4 products. We have the livestock insurance, and we don't mention a lot today, but it's a very interesting thing, and index-based insurance also deal with that. We have the crop production insurance, meaning the crop loss insurance. Then we have sales insurance, what about stock insurance, fire insurance, market insurance. And we have the production tools, farms, machinery, etc. So what we can conclude here is the portfolio of insurance is mainly focused on post-harvest risk, with sales, production, product, but the revenue of farmers are mainly affected by production risk, so crop loss. So here we saw an insurance gap and looking for opportunities, and that's where we entered into index-based insurance. So why index-based insurance? So we used to find traditional crop insurance product in the market. So you have single, you have multi-risk insurance product, you have farm insurance. The limit to this product is the cost of administration, and at the end of the day, the cost for farmers on one side. On the other side, for the actuarial way, we have 2 effects, anti-selection and moral hazard, making insurance company very afraid about agricultural insurance. Perhaps my client will go on holidays on behind doing farming. Here I can say insurance sector don't know also rural sector very well. So when we speak about market education and awareness raising, we will see later, it's the 2 sides, of course, of the story. Farmers need to learn finance, but financing guys needs to learn farming also. So on this basis, emergence of index-based insurance product appeared. So what is this in a very easy way? So it differs from traditional insurance where your contract is quote and pay in function of your individual risk. you have a direct relation between the insurance and the insured, and the agreement on this relation bring a level of premium and bring a level of payout when there is a problem. So index-based insurance make it different by linking the product to an index. So this index is a parameter. It can be, of course, climatic. It can be relative also to the yield of your activity. So the level of reference become the point to make the payout. So you can see it easily here. It's a simple function for index-based insurance. For example, a drought product, where here you have the index. You can imagine it's millimeter of rain. And here you have your claims amount to be repaid in case of problem. And you have basically a linear function with an entry point. So above this point, no payout, because the rain conditions are sufficient to do your activity. And after this point, the exit point, it's a maximum payout. The contract considers your activity is totally failed. Between the 2 points, you have here a linear curve to reach the 2 points. Okay, the idea is this risk and this claims is automatically captured by the product. So you fix the different triggers in accordance also between clients and insurer, and you will run your product like this. When triggers are reached, all insured producers are automatically paid without field inspection, without any process, claims declaration, etc. The problem in front of this, of course, is the capacity of your model to find the reality of the insured farmers. So that's what we call the basis risk. If your index gives a different story than your farmers have in the land, you will have, of course, a mismatch. So all the point is to find a strong model in order to have an acceptable basis risk associated with your product. On this basis, you have some advantages of this kind of solution. And the first one, if you compare to traditional insurance, will be the lower cost for the insurance industry first, lower administration cost, and automatic claims payout. So you reduce a lot your cost on the industry side. On the other side, you have, of course, the capacity to design specific products, taking into account many factors difficult to take into account in traditional insurance. So you can have a dedicated product for a certain variety of maize, for example. You will be able to develop with this kind of product. You also reduce moral hazard and anti-selection, basically by having a group policy associated to a certain location and duration. So there is no effect, in fact, of the acting of the insured people in the payout. That's where the market can easily take this risk. Of course, in terms of advantage for farmers, the first is to facilitate access. We started saying farmers were requested a risk mitigation tool. So this kind of product allowed us to provide a product. Then 2 points I have to mention. The first one is improve agricultural practices by covering the good practice. It's relative to the moral hazard I mentioned sooner. So of course, when you have an index-based product, you will put your parameter in accordance with the best practice. For example, sowing dates will correspond to the best sowing dates, etc., etc. The second point is to make investment higher. So one big problem of the agricultural value chain will be its capacity to increase the activity by investing more. So of course, with more secured investment, you will be able to increase. So of course, we explain this for farmers. So at farmers level, you can see in this graph. So here you will limit your loss of revenue in case of insurance because you have the insurance coverage, but you will also renew your capacity of investment quicker than without insurance. In my example, without insurance, the farmers need 3 years after the shock to have its capacity of investment renewed. With insurance, in 1 year, because of your capacity to have a new loan or things like that, you will go faster. And this idea, in fact, I let you read this, but you can apply to the whole value chain. It's not only farmers' things. You can explain it to the bank, you can explain it to the agribusiness, to the crop dealers, and even to the state to provide some tools to increase their activities. So value chain approach will be the good approach for having this kind of mechanism, taking into account the all stakeholders. So in terms of experience sharing, just a few minutes to explain better what is a crop index-based insurance product. So we can mention two kinds of products for the climatic index. So climatic index, you will insure the climatic condition, basically. You can do it with a rainfall index using weather station, and then you will base your index on weather station information. In terms of resolution, we used to work with 5 kilometers, meaning you need to have your insured people less than 5 kilometers of your weather station. So of course, the resolution is high, but the network of weather station requested is very high and expensive also if you don't have the infrastructure. So index rainfall is the first way. The second way is satellite index, saying that you need a huge weather station network. How you can do without it? You will try with satellite information. And there, many types of index were developed with three major. The first one is relative evapotranspiration. The second one is biomass. And the third one is rainfall estimate. So three different ways to estimate the climatic condition you had on the land and the result you should expect on your activity. And the insurance will compensate the difference of the result you could expect with good or bad climatic situation. Okay, so the resolution is different according to the type of index. The best one, as far as I know, is 3 kilometers under 3 kilometers. And it's something very important to understand. So all the farmers located in the same pixel will be covered by the same product. They will have the same trigger, the same exit, and the same result of the product. Okay, case studies are in Africa, because I'm also from Africa. So we use the rainfall index for maize, especially in Senegal, and satellite index a little bit everywhere, but in this example in Mali for cereal. Okay, another approach, because of course climate explains a lot of loss, but not all, and so you have an average yield approach. So what is it? Basically, it's a yield insurance product at a group level of development. So the coverage will be mandatory for the group. If we are the group insured, we can take the decision to be insured or not, but if we go, all the group will be covered. So on this basis, you can do a little bit whatever you want. Here you have 3 levels of claims proposed by the product, meaning this time we are not in millimeter, we are in yield, how many tons of maize or cotton I will produce. So under a first trigger, I will have a claims at this level. A second trigger, the claims increase, and the third trigger, the claims became maximum. So here you have the same principle with a different kind of index. Other example, and just to be fast, but as far as climatic insurance is concerned, drought or flood coverage are the main developed product today. So you have different crops concerned. First, the cereals, very sensitive to rain conditions. You have livestock insurance covering forage, for example, forage availability in a certain area for cow farmers. For example, in Kenya, they have a very nice experience on this. Extreme temperature insurance. So, of course, you can apply this kind of things on temperature. And my experience on it was in Egypt about tomatoes. So basically, we had a situation with farmers if they had 3 or 4 days above a certain temperature, the quality of tomatoes were decreasing, so they will have a smaller price of sales. So we made this temperature insurance in order to reimburse the gap again of production between good or bad conditions. Hail insurance was developed especially in Tajikistan for cotton industry. And natural disaster we will mention more this afternoon. Okay, as I told you, I'm not from the insurance sector, but I was kindly invited to an actuarial conference. So I had to think a lot about what challenge we can share together in order to make it simple for you to develop. So as far as I was concerned, my main challenge was for the pricing. Very difficult to price a product, we mentioned a little bit earlier, and in this pricing to respect the whole equilibrium we discussed sooner. So you need a balance in order to have a good, of course, a good environment to develop your product, but you also need to have something very strong and very, with a lot of added value to make it interesting for the farmers. So price is something very sensitive, of course, for that. So main challenge for pricing at the beginning, availability and quality of data. Of course, you need a long series of data. If you are speaking about yields, you will need more than 5, 7, 10 years, according to the reinsurance company you are working with. If you are looking at some climatic data, of course, you need also long and disaggregated database. So it's the first challenge to have data. Second challenge, of course, will be your unit of insurance. I mentioned index-based insurance is associated to a location or to a group. So you need to find the good level. It's not necessarily interesting to cover a whole country against a risk located in a small area. So you have to find your good level of insurance. I mentioned village, perhaps the best resolution you can have, 3 kilometers, under 3 kilometers, until region or country. On this basis, you have the net premium. Net premium is after reinsurance. So the first part of the work, I used to make it with agricultural experts, basically, and farmers, and etc. And then we go to the insurance industry. So there is some special rules and some special concern to take into account. So adjusted burning costs are adjusted, through the trend, through the tail value at risk, also taking into account a question of return on capital, and all this makes the price, of course, of your product increase. So again, a good equilibrium is to be found between an equilibrated product. You need a product we will not make your reinsurance partner go out the first year, but you also need an affordable price. Okay, at the end of the day, the commercial premium, the gross premium, sorry. So what you will include tax on your product. And many countries I had the chance to work, they were taxed on this kind of product until 20%. 20%. So when you discuss about incentive, you can discuss about subsidy, but you can also discuss first about cutting the tax. Okay, the added value of the product depends, of course, on the equilibrium between level of coverage and level of premium. The good level needs to be found to have happy farmers and still their reinsurance company. And a point also I would like to mention will be the duration of contract. In this kind of contract, we used to have a few months duration, meaning I will have my pricing perhaps 1 month before the inception date, in the best case, and then the duration will be very limited to the crop season, for example. A good way to make it simple for everybody will be to have a multi-annual pricing. It's something very difficult to put in place, of course, because the level of information will change and also the exposure to the risk will change. But if you are in capacity to put it in the table at the beginning of your product, it will be easier. So I don't come back on the stakeholders, very well developed by all the colleagues. Yes. So about the key success factors. So the first one is about regulation. I don't come back, but you need, of course, a favorable environment, a good collaboration to develop this kind of experience. A lot of public and public-private partnership have been developed on this field. You have private public insurance companies, you have subsidies offered to reinsurance, etc., guarantees, etc. So the P is something you can think about in this kind of project. Then, of course, the product needs to be elaborated in close collaboration with farmers, but not only with farmers. In fact, with all the stakeholders. Okay, because basically, if your aggregators will distribute your product, we saw that with the presentation before, you need to have an aggregator comfortable with the product, with the revenue mechanism, etc. So design your product with all stakeholders will be key to succeed. Of course, you need added value to your product. Speaking about micro-insurance, you will need a tailored coverage. You will need a claims ratio, significant. My opinion is 60%. It's interesting as a claims ratio for this kind of product. And a fast payout, very important, of course, to make the trust increase. Then you need a simple product, a strong network of delivery channels, but also a risk taker. Okay, and perhaps to quick finish about challenge and opportunities. The challenge, just to come back about what we said this morning, the first and perhaps main challenge, I would answer your question by telling the trust. The key point is to have trust. Trust from risk taker and trust from clients, farmers. So in order also to build this trust, you need to respect the equilibrium, market development and consumer protection. Of course, you need happy consumer to develop your market, but you also need a market to have happy consumer. And we experiment that. You make some pilot with 100 people, you will not have impact, unfortunately. So you need 1,000, 10,000 in order to develop the trust and the positive view of your product. Okay, the first point will be skills building, training at the whole level of the value chain. So of course you will not just train the farmers, you will train the regulators, the risk takers, you will train the aggregators, and you will train the farmers on different points, but with all the same objective: understand your product, make it transparency, and make it fair for all the parties. Then you will have marketing material. And marketing material, for people like me coming from NGO, it's not always easy to design, because we go from awareness raising, you need risk mitigation tools to develop your activity, directly to marketing. Buy my product, you will be happy farmers. So you need, again, to make a good balance between this. Again, make it transparency, put it clearly on the paper with simple words, but with clear information about the risk, what is covered, what is not covered, about the data, the premium, the payout calculation, etc. Put it all on your marketing material, and your product will be associated with a better trust. And at the end of the day, communication. So of course, this kind of product can be monitored day by day. I can, using mobile, send the information to farmers, even hours by hours, but today it's not the case. Today, this kind of product are providing a claims report at the end of the season. So it's something to improve, how to increase the communication, to make the information available every day for insured farmers. Then about the opportunities. So the main sector where this kind of solution were developed is the rural finance. And for the area I used to work is for microfinance institution or agricultural banks, for example. And here you have basically one model, let's say two models. The main model is to link insurance with credit. Basically, you will cover your agricultural credit with crop insurance. The second model, perhaps to link insurance with savings. So it's something difficult to perhaps to imagine, because rural saving is not always well developed. but the interest also to cover your saving with this kind of product, of course, will be to make your revenue available for develop your activity or face life problems. And perhaps the last point I would like to mention here about impact investors and donors. Because index-based insurance is today a tool promoted by a lot of partners. So you have opportunities to have support, financial or technical support in this field. Insure resilience was mentioned earlier, but you have other impact investors like Oiko Crédit, Grameen Crédit Agricole, Responsibility, Roots Capital, who are ready today to refinance portfolio at better condition and also to provide technical assistance program when you enter in this kind of solution. As far as donors are concerned, and as far as I know, World Bank, USAID, KfW are very active on this field also. So you can associate this kind of program with refinancing facilities, guarantees, and technical assistance, of course. And just to finish, to dream or to discuss together about what distribution model we can have tomorrow. So we mentioned rural finance, we mentioned digital insurance a little bit, associated with a mobile operator, but also without mobile operators. You can have today Android application, internet site, making this kind of product available for your client. So mobile insurance, multi-channel insurance. Then bundling insurance with other services. For me, it was the main success we had for West Africa, bundling insurance with inputs, agricultural inputs. So you have a well-known experience in Kenya with seeds insurance. So you can apply your insurance just to the seed bag or, of course, fertilizer bags. Then you can develop this model with package, and you will provide to the farmers with perhaps some problem of complexity of your product, because the farmers, of course, receive a lot of things in the same package, but at the same time, you will have all what he needs to crop. So you can package seeds plus inputs plus credit plus insurance plus advice plus access to market. And here you have the ultimate package for West African farmers today. And at the end of the day, one word about public insurance. So we mentioned a little bit earlier about ARC, ARC, and other schemes where the state is covering itself from the climatic risk. Very important, of course, for him to have tools of security policy. But you also can have a safety net mechanism. So to use insurance, and index-based crop insurance has a safety net mechanism to provide some social support to vulnerable population in case of problem. So we will discuss this afternoon about cat insurance, but perhaps to close on cross-selling. So today, crop insurance is an entry product for many people. So you can, from today, anticipate the fact that you will be able, perhaps, to cross-selling your crop insurance with other products, like, of course, life, health insurance, or property insurance. Thank you very much.